Welcome back. We are now in segment 5.9, and in this segment we'll continue our discussion of the items under P&L account. So far we have discussed items up to opening and closing stock of work in progress and finished goods. And the next item in the CMA data is under the expenses is selling, general and administrative expenses. So while discussing the segment on other manufacturing expenses, right? When we discuss this segment, we told that the CMA data has some limited rows, right? It has a option for it allows entry of only a few number of items such as raw material, stores and spares, power and fuel, labor, repairs and maintenance, right? Depreciation. I have left this blank. Okay, I'll tell you. Then you have the opening, opening, closing of work in progress, right? Finished goods, and then you have one more row. This I will tell you now. These two I will tell you now. Then you have interest, right? Then non-operating income, non-operating expense, provision for tax, and finally arrive at the net profit. So these are the only entries that the CMA data allows, right? So what are the items that the CMA data allows? Raw material under the expense side, right? In the income side you have sales, right? So under the expense side you have raw material, stores and spares, power, labor, raw material, repairs and maintenance, depreciation, opening, closing stock of work in progress finished goods, interest, non-operating income, non-operating expense, and finally provision for tax. These are the only entries that the CMA data allows. So any other item other than these, right? Other than these items, any other item either has to be other manufacturing expense. We put it here, right? Either it has to be other manufacturing expense or it has to be selling and general expense. So other manufacturing expense and selling general administrative expense are sort of, you can think of them being the other category. Like if nothing else, if the expense which we are considering doesn't fit into any other category, we can put it under these two. So whether to put into other manufacturing expense or selling general expense depends whether that expense is a direct expense or a indirect expense. This we are discussing the other manufacturing expense. Once again I will explain this. So an expense can be a direct expense or a indirect expense, right? So we have seen various items under the CMA data. So we have decided now the item which we are considering, say an item X, some 10 lakhs. So we have seen all the rows. Raw material, this item doesn't fit into raw material. This is not a raw material. This is neither a stores or spare. This is not a power expense. This is not a labor expense, right? This is not a repairs maintenance. This is not a depreciation, right? This is not an interest. This is not tax, nothing. So we now decided this item of X 10 lakhs doesn't fit into any of the categories. So now we have to either fit it into the other manufacturing expense or the selling general administrative expense. So these are the two categories, right? These are the only two leftover categories. So any item which doesn't fit into these categories, you can directly push into either this or this. So where to put, whether other manufacturing or selling general administrative. So that depends on the classification, whether it's a direct expense or indirect expense. So in the segment of other manufacturing expense, what we discussed was till the point the good is manufactured, right? So all expenses incurred up to the point of manufacture of the good will be a direct expense, and all expenses incurred after the goods are manufactured is a selling general administrative selling expense, because the sales will arise after the good is manufactured, and direct expenses are incurred up to the point of manufacture of the goods, right? So the selling expense is actually is actually thought of a broad category as selling general and administrative expense. So these three put together we have a single entry called selling general and administrative expense. So we discussed various examples under direct expenses. When we discussed other manufacturing expenses, we discussed various examples. For example, we spoke of rent, right? Factory rent. If the factory where the unit is running is taken on lease and it's paying rent, no, so the factory rent will be a direct expense, because unless you pay the rent, you cannot operate in that premises. So to manufacture that good, that rent is a direct expense. So rent will be a direct expense. But we also spoke of if rent is for office, right? For running the office, for running the sales office or general office. So that will be a general expense. So this classification we already discussed. We also discussed another example, say transportation. So transportation of goods, say for example transportation of raw material, to bring the raw material to the factory. So that will be a direct expense, because Unless the raw material comes to the factory, you cannot start the production. So this will be direct expense. However, if the transportation expense is for distributing, so right, to marketing, to sending these finished goods to the warehouse or to the customers, it will be a selling expense, right? So that classification, that distinction we have already discussed in an earlier segment. So when you see an item called administrative expense, so you can put it under the selling general administrative expense. So what are administrative expenses? Selling expenses, these are incurred towards selling the product. So you can say the promotion expenses, all the promotion expenses like advertising, like hoardings, for example, your pamphlets, distribution of sales pamphlets, right? All are selling expenses. For example, commission to your salesperson, that is a selling expense. So all expenses related to sales will be a selling expense. So what are administrative expenses? So to run the your office. So to run the office, you need a lot of administrative expenses such as telephone expense, telex, right? Postage, courier charges, right? All these are general expenses. All these are administrative expenses. And then you have general expenses. Like what are general expenses? Any other expenses that cannot be clubbed into these two. So all general expenses you can put it. For example, simply you have some gardening expenses. You have a garden and you just maintaining the garden in your office premises. So that will be general expense. So general expenses are any expense that cannot fit into any other category. So administrative expense you can put it under selling general administrative expense. Advertisement expense, as we have discussed, this will be under the selling general expense. Marketing expense, as we told, it is a expense related to selling the product. So it will be a selling general administrative expense. Agency commission, we already discussed, commission on sales is a selling expense. So auditor expenses like the company to get its financials audited will be paying some expense, some fee to the auditor. That will be a general expense, right? So auditor remuneration, either you will see the term auditor expense or auditor remuneration in the P&L account. You can club it under selling general expense. Books and periodicals, the company might subscribe to various industry journals and other periodicals, so that will be a general expense. Bank charges, see, this will actually discuss when you come to the interest. So what happens is, generally companies will, in the P&L account, they will have a head called finance cost. So in this they'll have interest paid to banks, interest on loans and working capital, and then have something called bank charges. So these bank charges are not actually interest, these are charges like, for example, processing charges. So if you are into advances, you know that banks impose something called processing charges. So on every 1 lakh or every 1 crore 2000 or something like that, so they'll impose some processing fee. So when the company pays processing fee on the loan avail, it's not actually an interest, right? It is a processing charge. So this will be a bank charge. So other charges can be BGLC, commission. So these are not interest, but these are bank charges. So in the P&L, when you have an item called finance cost, you cannot straight away put it under interest because it comprises both of interest and bank charges. So the individual breakup will be given in a separate schedule. So you need to go to schedule and see what is the interest component and what is the bank charges. So interest will go under a separate head. In CMA, you have a separate head called interest, while the bank charges will go to the selling general administrative expense. So in the case of Maruti Suzuki, we can see this, right? When we go to that example, we are going to see this, right? In the interest. So in the next segment we'll discuss about interest, there we'll see this, right? So bank charges is a selling general expense. Brand building, again this is towards the brand, towards sales, right? So it is a selling general administrative expense. Brokerage and discount, again it's a selling expense. Carriage outward, so we discussed that carriage is something like transportation, right? Is related to transportation. So earlier we told that while you transport raw material to the factory, it is a direct expense, right? While we transport the complete finished goods to the warehouse or to the customers, it is a selling expense. So you have to see what is this. Whenever you see the term outward, carriage outward, it actually refers to the transport of finished goods. So this will be a selling item, right? This is a selling expense. The term freight, if it is used, it actually refers to carriage inward. So commission and discount, commission on sales, this is obviously a selling expense. Communication expense is a general expense. Consultancy charges, this we discussed earlier. If it is the consultancy is on technical nature, right? If the consultant is offering technical advice, expert advice on technical nature, such as product design, plant layout, that will be a direct expense. However, if it is for a sales promotion campaign, right? This consultant is doing an advertising campaign or a brand building exercise, so that will be a general expense. So in the absence of information, please put it under the direct expense. So, but if you're given a what sort of consultancy it is, then you can put it in a selling expense. Conveyance and traveling is a general expense. So we are assuming that this is not a is not related to any material. If it is a material, you usually be given the term transportation. So when you're saying conveyance, it is actually traveling charges for the staff and directors. So that will be a general expense. Credit card charges, it's at the point of sale, right? So it's a selling expense. Dealer incentives, again, dealers come into picture once only when the sale happens. So that is a selling expense. Directors remuneration. So when you have a term called salaries, right? So earlier we told that labor charges is a direct expense because these are salaries paid to the production people. Since it is a directly they are directly involved in the manufacture of the product, we can put it under the direct expense. Salaries to office staff. So when you have the office, you have various staff, not just the ordinary office staff, but also the directors and the managing directors. So these people are offering the services not to the production floor actually. These people are offering the services to the overall to looking after the overall affairs of the company. So you can put director's remuneration under the general expenditure, right? So director meeting fees, sitting fees also direct expenditure, also a general expenditure. Discount on sales. So there are two ways of dealing with discount with sales. Sometimes because it is related to sales, you can put it under selling expense, selling general expense. Yes, you can put that. But sometimes, but more a correct way is actually to deduct from the sales. So what you're saying is, when you sold the product, usually you sell the product for 100 rupees, but to a customer you offered a discount of 10, and thereby you actually sold at 90 rupees to this particular customer. So actually what you're receiving is 90. So actually sales should be 90, isn't it? So you can show sales as 100 and then show an expense like selling expense, discount expense as 10. So on the credit side, that is on the income side, you show 100, and then on the expenditure side show 10. So net effect will be 90, or directly you can show sales as 90. Both are correct. Usually the correct method is deducting the discount from the sales and showing directly the sales as 90. So uh, it's a choice. Discount on sales, you can put it under selling expense, or you can deduct from the sales amount. Distribution expense, again, distribution comes into picture once the product is ready and is for sale. So that is a selling expense. Interest on capital. Right, interest on capital, usually this is not relevant for companies. This is not for companies. So in the case of proprietorship firms and partnership firms, right, more commonly in partnership firms, right? So interest is paid on the partner's capital, right? So the partners will be investing some amount, the capital, into the business. So they'll be paid interest on this at a predetermined agreed amount, which is mentioned in the partnership deed. So this interest amount is actually a non-operating expense, in the sense that this got nothing to do with the manufacturing or to the general nature of this. Is not, see, we have classified directors remuneration, right? Directors remuneration as a selling general expense. That is right, because just like the salaries of office staff, the directors are also offering, they're working as employees similar to the office employees. They're also working as an employee of the company. They're receiving some remuneration. So director remuneration can be selling general expense, but the interest paid to them on their capital has got nothing to do with the running of the company. It is neither a production expense, direct expense, or a selling general expense. It is a non-operating expense. So interest on capital has to be classified under non-operating expense. Similarly, interest on drawings, this will be a non-operating income to the company. So if the partner has withdrawn some amount and you and the company levies certain interest on the drawing, that will be a income to the a non-operating income to the firm, right? So all these charges, the explanation is not given because it is self-explanatory. Internal audit charges will be a, just like auditor's remuneration, it is a selling general expense. Internet charges, general expense. Legal expense, again, I mean, it depends on what actually you're pursuing. Usually it will be a general expense because it will be we are dealing with customers. So if it's got something specifically to do with the production process, something like that, then you can have it in the direct expense. But usually it is a selling general expense. Market research, again, marketing is related to marketing and sales. So selling general expense. Membership subscription. So the firm can be a member of some association, some industry association. So if it is a automobile company, there might be some all India automobile association. So the firm, in order to be a member of this association, needs to pay some membership fees. So that will be a general expense. Office maintenance, again, general expense. Out of pocket, general expense. Overseas travel expense, again, usually the travel will be done for promotion, sales promotion. So it will be selling general expense. However, if we can specifically identify the purpose of this travel as being something has something to do with the technical nature. For example, to negotiation. For example, in order to negotiate, for example, to meet a consultant, right, to purchase a plant and machinery. For example, for the design purpose. For example, like the product specifically it's technical in nature. Then you can, if you know the purpose, exact purpose, you can classify it under the other manufacturing expense. Otherwise, it will be a general expense. Packing expense again. Usually, packing means packing of finished goods, so it will be a selling expense, right? Postage, general expense. Telegram, telephone, printing stationery, all are general expenses. Professional charges. So there will be some independent professionals like chartered accountants and other people. So the fees which you pay to them will be a general expense. Professional membership charges again general expense. Publicity expense is a marketing related activity, so it's a general expense. Sales promotion expense again sales selling expense. Sales tax is a related to it's a tax paid on the sales, so it's a selling expense. So security charges, so usually if you're not specified what is the security, you can put it under the direct expense, that's the other manufacturing expense, because usually the security, you employ security in the factory for you know safeguarding the raw material and plant and machinery and stuff like that. But it is specifically security for a finished goods going on. Then if you know the purpose, then you can classify it under the general expense. Staff welfare expense is a general expense. Tax audit general. VAT ex general. Warehouse comes after the good is manufactured for sales, right? Warranty expense again. Usually we classify it under a general expense. So if a company gives 2 years warranty and during this period some problem arises, a customer comes for replacement or some free service, so the expenses incurred is actually sales related, a marketing related activity. So you can place warranty expenses under selling general expense. Water charges, uh, I mean sometimes water is used, bulk water is used for the processing activities. There might be some ore and you need to wash it, right? And you purchase bulk water to specifically clean this ore. So in that case, that will be a direct expense because it is in the production process. If you're not given any specific reason, you can put it under direct expense. But water charges, the usual practice is you look at the amount. So by amount, you can actually make out whether it is a huge amount or a small amount, right? For example, it is a very small amount, say less than 1 lakh, you can put it under general expense. So, in office you have this water cans, right? People supply this water cans. So for drinking purpose, internal consumption. So you don't know if you're not given any specific breakup. Water charge is a small amount, please put it under selling general expense. But if the amount is more like 10 lakhs, you can easily make out what is this higher amount for this activity of the company. You will easily know what is a higher amount. If the amount seems higher to you, put it under the direct expense. Then write off, see, in banks you might have heard of this term, right? Recovery in written off assets. This is something you must have heard of, right? So what is written off? Written off means a customer has to pay you amount. You pursued him for many months, years, you're pursuing, he is not paying, you have lost hope of recovering it, and you finally write off. You write off in the books, but actually you don't stop pursuing, so still you'll be employing your recovery effort. So in case if you recover amount in the future, so that will be that will be added to the credited to the P&L account as an income. So write off, when you write off an amount that is due to you, that is a selling expense, in the sense that the sale amount which you have to receive has turned bad, so it is a selling amount. Just like provision for doubtful debt, sometimes companies maintain something provision for doubtful debt. So they make a, for example, every year it is the experience of the company that 5% of the customers don't pay. It is the past history. For the past 5 years, they have been observing that around 5% of the sales amount they are not receiving. So in this year, because they know that, as we discussed in the topic of conservatism, one of the accounting concepts we discussed, the company should not overstate the profit. So if it knows that 5%, around 5% customers are not paying, they can provide a provision of 5% in the P&L account. So that will be an expense. The expense is not incurred, but it is likely to be incurred, right? Right. So that will be a selling general expense. Write off is a selling expense. So we'll continue with the example of Maruti Suzuki. Here, this is the expenditure. So it's in one single page because so Maruti Suzuki has prepared a one single compact format for the P&L account. The individual breakup is furnished in the schedule. So let us look at these items and see whether any particular item can be classified under selling general expense. So cost of material consumed, we have already classified it under raw material, that is gone. Purchase this will come to it. Okay. Change in inventory we have already discussed on the opening and closing stock of work in progress. Under these items, actually, there are a couple of items which we didn't discuss, like stock in trade and all. That again will come to shortly. Employee benefit expenses we have discussed. This we put in the labor charges. Finance cost we'll see in the next segment. Finance cost we'll see in the next segment when we discuss interest. Depreciation. This depreciation we have discussed. Amortization is left. We will discuss when we come to the intangible assets. So other expense. Okay. So there is something called other expense. For this schedule, let us see the schedule. So there we might have some items for the selling general expenses. So let us go to schedule 31. So this is the breakup for the other expenses schedule 31. So let us see whether any items can be classified under selling general expenses. Consumption stores we have already put it under stores and spares, so not required. Power and fuel we have already put. Rent we have placed it under factory rent. If you remember, this we have considered as factory rent and put it under other manufacturing expenses. Repairs and maintenance and we have put it under the relevant head. Insurance we have assumed it is a direct expense, we already considered. Rates and tax royalty also we have already discussed. Tools machinery space also we have discussed. So net loss on foreign currency transactions. We didn't discuss the segment of non-operating expense. So when we discuss that, we'll see that this is a non-operating expense. We'll come to it later. Now, advertisement. This is a selling expense, right? This is related to the sales. So sales promotion again, warranty product recall, transportation distribution expenses, because we don't know whether this transportation is for the bringing the raw material or sending the finished goods to the customer. So because we have this term called distribution, usually distribution is related to selling, so we can put it under the selling expenses. Again, net loss on sale discarding fixed assets will come to the when we come to the non-operating expense, we'll discuss this. Provision for doubtful debts, just now we have discussed, this is a selling expense. Other miscellaneous expense is the rest of all expenses which were not fit into any other category. So this is a selling general expense. So these items, right? Advertisement, sales promotion, warranty product recall, distribution expenses, provision for doubtful debts, and other miscellaneous expenses. These items we will put it under selling general expenses. So advertisement, sales promotion, warranty product recall, transportation, distribution expenses, provision for doubtful debts, and other miscellaneous expenses. So these items will be putting under selling general expenses. That is 1491.8 crores. Okay, 14,918 million or 1491.8 crores. So 1491.8 crores we are putting under the selling general and administrative expenses, right? So this we have calculated the sum of various items, 6 items we have calculated. So the total is 1491.8 crores. So let us put it under the in the CMA data under selling general and administrative expenses. So with this we come to the end of this segment. So in the next segment we'll be discussing about interest. That is a very important for the bankers. So we'll discuss the item of interest in the next segment, right? See you then.